We're just looking for what we can break out. It's all about a tax breakout for us, and that's what we're looking for. If you're generally upfront with them of what you need in those invoices, it doesn't hurt them to give you a good detailed invoice, and then you can use it to strategically get that on your tax return. Hey everyone, Payton Gillis here from REI Tax University, where we talk all things tax planning for real estate investors. Today I want to get into something called de minimis, but what I'm really talking about is detailed invoicing and how you can use it effectively as an investor or a flipper to really maximize and optimize your deductions every year. So within the IRS rules, there's a rule that if you go purchase an item that has a useful life of over 1 year, and that item is over $2,500, then you may likely need to set it up as a fixed asset and depreciate it, right? So if you go get something, let's just say it's windows that are $20,000, and you go get those windows, and if the price of each window is over $2,500 with installation, then you get a fixed asset of $20,000, and you might have to divide that by 27 and a half years. You don't get to take all $20,000 right away, about $700 a year over 27 and a half years that you actually get as a tax deduction that year, which can surprise a lot of people. They're like, I spent a lot of money rehabbing, renovating. Why do I not get all those deductions? Especially this is when we're talking about rentals in this circumstance. So if we're talking about that and depreciation, then a lot of times people are going to be surprised by not getting full $20,000. So let's talk about it and how you may be able to get that full $20,000 through something that's really easy if you know what you're doing, but it's called detailed invoicing. So in that quick example we just talked about, it was $20,000 for windows. Well, if you bring your accountant an invoice at the end of the year and it says, hey, this is $20,000 window installation. The contractor gave you an invoice, single line item, window installation, $20,000. The accountant doesn't have much to do with that other than to put it as a fixed asset and divide it by 27 and a half years. And now if they're good, they should ask you about it, but they may not. It may likely be that they just put that on and they do the tax return and you don't even realize it until at some point you decide to look at it. So what you could do instead is ensure that contractor gives you a detailed invoice that says, instead of this is one line item for a window installation at $20,000, we installed 10 windows for a total of $20,000, or we installed 10 windows at $2,000 a piece for $20,000, right? Now what that invoice does is I now have backup as the accountant. We now have proof and documentation to say that no single item was over $2,500. They're all de minimis. They're all less than $2,500. Meaning we don't need to set them up as fixed assets and depreciate them. They can all be expensed as repairs and maintenance. So the entire $20,000 goes on repairs and maintenance as an expense. You get to deduct it year one. You don't have to really worry about any capital gains, any depreciation recapture, things like that with it, because it was an expense. It was not a fixed asset that you had to set up. Now, again, the key to this is getting those detailed invoices. So again, when you're doing rehabs on one of your rentals, you're doing the BRRRR method, get detailed invoices. I don't want to see an invoice from a contractor that just says, hey, rehab work $30,000, windows $20,000. Like, you want to see what was done and just explain to them. I've called clients and the contractors to get more detailed invoices before and told them, hey, this isn't questioning the work that was done, anything like that. We're just looking for what we can break out. It's all about a tax breakout for us, and that's what we're looking for. If you're generally upfront with them of what you need in those invoices, it doesn't hurt them to give you a good detailed invoice, and then you can use it to strategically get that on your tax return. If you're not sure if you're getting it, and when you talk to your accountant about that, when you provide them your details and things at tax time, take the time to meet with them in the fall if they're offering that. Get projections done, but definitely take the time to really understand it. If they send you your return for your review, as you should, review it and actually look through it and make sure you're picking up these kind of items, because these are the things that a lot of times the accountant will never tell you and will get not really missed. I mean, they got set up right, but they're missed because you didn't get the detailed invoice of what actually happened. So guys, if you enjoyed this content, hopefully you found it useful. Like, subscribe, follow us for more content such as this. We're on YouTube, we're on Facebook, or jump over to reitaxu.com. We're at REI Tax University. We talk all things tax planning for real estate investors. So if you're an investor, you can get some content, some resources, a lot more that you can utilize to actually reduce your specific taxes in your situation. Appreciate you guys tuning in.